Hello, everybody. Welcome to my startup roadshow. What I'm doing with my startup is similar to companies who are going IPO. They're like showing their companies to all these investors. I'm not doing it that big, but I do have a little startup, and we are trying to raise some money for it. And we have I've been able to convince some people who are wanting to take a chance on the vision, the idea itself. I'm here with Erwin Takor today, who is the founder of Takor Capital. I'm definitely saying your name wrong. I'm sorry about that.
Thacker, you're good. You're good.
Thacker. That's so much easier. Thacker. I always make it harder for myself. Thacker Capital. And he's been following me for a couple months now on YouTube in the Palantir community. Found him through Palantir. He has his own YouTube channel, does content as well. And he is becoming a great friend as well, and someone who I pitched a couple weeks ago, had a long 2-hour discussion, and ultimately he decided to invest. So first of all, Erwin, thank you for doing this. I'm happy you're here. I want to run through some questions today on sort of what your investment thesis is. So I guess that's my first question. What was the necessity for you to kind of take a risk on Audea?
All right, so this is going to be a little bit more long-winded. I actually kind of prepped for this question a little bit. The reason is because I really wanted to frame my opinion on this, because I think if I gave you like bits and pieces, that really doesn't make sense. So kind of bear with me with this. So
love it.
We know that there's a lot going on post-pandemic in the macro, right? So outside of the US, there's the Russian invasion of Ukraine. Eurostat's EU GDP data actually shows a slowing household consumption, and there's increased lockdowns in China. So that's just abroad. Now, inside the US, we have an unsustainably low unemployment and labor force participation rate. So we additionally have 8.6% inflation, according to the May CPI report. And we have a stock market that's really, really addicted to cheap money. So this cheap money has resulted in an abundance of unprofitable and barely profitable businesses, right? So when money becomes more expensive, it's not if, or I guess it's not, if, it's when these businesses are going to go, bankrupt, and they're going to pretty much fall apart. So after that happens, unemployment's going to go up, right? Because if you don't have money, you're not profitable. No one's going to keep lending you money, and you really won't be able to afford the interest payments, like especially if you're a company that's over leveraged right now. So once that happens, there's going to be a sharp increase in unemployment. That's going to cause the market to get a little bit scared. And typically that's not that big of a deal, right? When there's an increase in unemployment, that's natural. The natural unemployment rate's at 4%. So really, we're not too far off. However, when you have higher unemployment with inflation that we haven't seen in 40 years, people are really going to start taking their money out of, those speculative investments, and they're going to move them to quote unquote safer blue chip companies. So Keep in mind, when the stock declines, it's perceived as weakness. That doesn't actually mean the company is weak, but that's the perception it's giving off to the total market. So if a company is perceived as weak, not only is that going to scare its shareholders, that also scares its board of directors. Now, this is setting the stage for companies that are well positioned to start buying them or merge with them. So now we're going to kind of move to like a more overall like specific market now. So in my opinion, there's a few things that's really unique with this crash or correction, depending on where the S&P 500 is at that day. So the first is cryptocurrency, right? Today, June 2022, whatever day you're watching this. So in June of 2022, the total crypto market cap is roughly $1 trillion. Now, this is down from $3 trillion in November of 2021. Keep in mind that in summer of 2021, we saw a lot of companies like Tesla, Square, and MicroStrategy adding Bitcoin to their balance sheet. So that's a lot of exposure to something that's significantly declined in value. And additionally, I'm quoting this here, and I want to say this is from CNBC, so take it with a grain of salt. There's around 20% of Americans who either own or have traded crypto. So from personal experience, every single person I know that's my age has had some form of involvement, whether that's like Bitcoin, Shiba Inu, Dogecoin, and that kind of ties it into my next point. Thanks to smartphones, TikTok, YouTube, and brokerages that offer mobile applications, there's an insane amount of retail investors in the market. So if we look at data published by the Bank of New York Mellon, we can see that in 2022, retail investors accounted for 25% of trading volume compared with 10% in 2011. Now, most of these retail investors get their news from YouTube and mainstream media echo chambers. So, they're kind of just regurgitating the same thing that they hear. So a good example of that is, when the stock market is down, you should sell everything because we don't know what's going to come next. But if you would go back to next year, when everything was trading at record high multiples, there was, there's no signs of stopping, and you should invest in this before it's too late. Pretty much FOMO takes over everything. So that was really long-winded, but I'm going to summarize it all once again because that really helps kind of frame my next point. So to summarize all of that, there is a war going on in Europe. There's global GDP slowdown. There's supply chain shortages. There's volatility in an unregulated $1 trillion market. There's 40-year high inflation. Higher unemployment is literally over the horizon. You can see it. This is not sustainable. And the stage is being set for big companies to take over smaller, weaker ones. So that may seem, unimportant or irrelevant, but then you got to start thinking about competition, right? So I don't think that Spotify and Apple are too concerned with what's going on the startup underground right now. I think they're panicking because, there's literally a liquidity crisis like throughout the markets right now. And they're worried about, their next earnings. They're worried about, keeping investors in the stock and dealing with every single thing like that. So as far as a macro perspective, this is really, and it's not really contrarian because if you actually think about it, this is a perfect time. But I think this is a perfect time to, lay the foundation for a startup like this because you have all these other big giants that are completely focused on everything else in the world. And boom, you can get a good team together. And on top of all that, one of the biggest things is I believe in people a lot. So like you said earlier, I've been following your YouTube for a little bit, but more recently, we've been able to chat and, we are becoming friends, which is awesome. So, and it's really cool to, watch what you've been doing, right? You've moved literal mountains and you haven't let any of that stuff discourage you, which, says a lot about your individual character. So regardless, even if the app, in my opinion, wasn't a good idea, I think your personality and your work drive is enough to make it worth something. Now, this is kind of, I think the app's a great idea. I think that, I think there's, under the right circumstances, I really think this could flourish. So you have a combination of the macro just being in total chaos. You have a team of people who are, insanely hardworking and insanely dedicated to this. I mean, how many other 23, 24-year-olds do you know that are giving up almost everything else in their life to, kind of pursue their dreams and, not taking no from, VCs for an answer? Like, that's disheartening to get told no. Like, oh, just because you didn't go to school here, just because you don't have an employment history here, like your idea is great, but it's you, which is totally the wrong way of thinking about it. So I think it's a combination of why I invested because it's the perfect time in the macro. I think you have a great team. And I think this product has, the opportunity to flourish with the right people and right support behind it.
I'm sorry, CNBC is calling. They would like a new host to host the Squawk Box. Because goodness, I love that. I did not know you were going to take it that direction. I love it. So number one, you've described a lot of the things that are happening in the macro. For those who don't know, Tacker Capital actually understands what's going on in the macro, which is why he's doing some nice business stuff on the side when it comes to investing. So I think the macro stuff makes a lot of sense. And that leading to what is a contrarian view, even though it's not a contrarian view, which is most people like, you're 24 years old, you're college educated. Why would you quit your job? And during what basically is a recession, start a very risky technology startup. But when you look at it and you look at history, 2008, Uber, Airbnb. I mean, the taxi industry was worried about other stuff. The hotel industry was worried about other stuff. And there were these people that had ideas. They identified particular gaps in the market that are very nuanced. And you need someone that has a really unique, even philosophical necessity to find these gaps. And they attacked it. And they were able to, Uber's first valuation was at $5 million. And
that's insane.
They became 100. And Jason Calacanis, the angel investor, who put 25,000 when it was at 5 million. Uber became a $100 billion company, and he became, his 25,000 went to 115 million. Now, not every company is Uber. Obviously, it's a very, very hard thing to do that. But going to your point, when the macro sucks, a lot of the big companies are not worried about innovation, and they're not worried about what's their next new product feature. Those things matter. But at the end of the day, they need to make sure the stock doesn't sell off. So when we talk about things like Google, 95% of their revenue is from search. So if they make improvements to search, that's good because shareholders need more revenue from search. But for Google to come up with the next self-driving car in a world in which 95% of the revenue is from search, it's a little bit harder for them to compete with something like Tesla. So that makes a lot of sense in terms of how the macro justifies the logic for making a more speculative bet. Now, let's talk about the idea itself and the concept around the idea. What we're building is an algorithmic search engine in the context of audio. We've identified a gap in the market space that most platforms are not actually centralizing audio content and then using AI, machine learning, and network effects to be able to build a thriving community of creators to get discovered for their content on a particular platform, primarily because a lot of those platforms are going down the editorial route in terms of buying media companies and then shoving that content to customers' throats, primarily to raise subscription revenues. So what is your thought on creating a pseudo YouTube of audio to get content creators discovered?
I think that's a great idea. And the reason I say that is because I am one of the most average American consumers. I'm a 25-year-old college male. So, to put it in perspective, I like YouTube because it's simple. It feeds me what I want to watch based off of my history. And typically the suggestions are very high quality. Now, like you said, there is a gap in what people are looking for on the audio content. I can't go to Audible and listen to anything but audiobooks. And the downside with that is too, their recommendations are just not on par. I use Apple Music. Really, the only thing I can use is the music feature. I don't have Spotify, so that completely limits what podcasts I listen to. I have the podcast app from the App Store, and its recommendations are terrible. So I think that there's the potential for a huge market there, because I'm a convenience-driven consumer, right? So the bottom line is people are lazy. And that's one of the biggest things, if you go to school for 2 or 3 years to go study economics or marketing, people don't know what they want, but people also will not use what they do not like. So I use YouTube for almost everything because it's a very user-friendly platform. This is me complaining, and this is such a first world problem, So with everything else going on, you feel a little bit bad saying that, but there's so many great apps out there that I simply will not use because it is not user friendly.
Yeah.
If that makes sense.
Yeah, no, I mean, the gap that I've seen over the past 2 years, and because I've done a lot of market research on this, is first of all, from the creator side, when a creator publishes a piece of audio content, it goes in towards the most archaic method of distribution that exists, which is through this RSS feed. And Twitter, before people used to get their articles from like open source RSS feeds, and Twitter completely demolished that because they were like, well, if we create a network where there's algorithmic recommendations, so the Bloomberg article actually hits the people interested in the Bloomberg news in that moment, which takes a lot of algorithmic targeting to be able to get done, then Bloomberg is always going to post to Twitter, which means Twitter is always going to have their ability to drive traffic. And Bloomberg gets an obvious benefit from that because they get traffic back to their website. And Twitter killed the RSS feeds for articles. The same happened with video with YouTube, and just being like, hey, just post it here. The hosting is free, and we might show your video to millions of people one day, and you can become famous. YouTube figured that out. For audio, it's been this archaic method of you post it in an RSS feed, and then the podcast goes to like a trillion different apps. The only apps that matter are Spotify and Apple, and they have their own priorities, primarily because they're subscription-based businesses, and they want high-quality content. And YouTube thinks Joe Rogan is high quality. Spotify thinks Joe Rogan is high quality if he has 11 million listeners. And so it's a question of where do you become the next Joe Rogan? And I think that discovery mechanism and consumer-based ease of finding that content is not necessarily available on the big apps. Next question for you is betting on the team. So why bet on me?
So kind of going back to what I said, I'm a really people-driven person. So I don't remember exactly which book it is, but there's literally tons of books. And I want to say it's a Peter Thiel one. I want to say it's 0 to 1. But one of the biggest things that I've kind of learned in my personal life too is it's better to have, a team of 5 of people who are dedicated to one work mission, or people, who are kind of loyal to one cause. And that kind of sounds cultist that I say that out loud. But the idea is that you have a good character of people working together to accomplish a goal. If you have a team of people that are more self-serving, they're not going to put the interests of the business or whatever, their driving forces. They're going to put their personal interests ahead of that. Now, that's not inherently bad. However, in the startup environment, you want the culmination of both of those. You want someone who self-interest is making the business succeed, but you also want someone who has kind of a strong moral fiber towards that business. And, I don't know you that well. However, seeing the content that you post, seeing the people that you interact with, and seeing how you conduct yourself, seeing how you market yourself, I can tell that one, you work, insanely hard, because like I said earlier, how many 23, 24-year-olds do you know that have given up this part of their social life, or, they've given up this other area of their life to commit to following, their dream, or to commit to building something that's, bigger than themselves. Because at the end of the day, a lot of times, like right now, I could not tell you the founder of Google. I don't remember who that is, but I use their product every single day. Yeah. And so it's one of those things that it's really unique, because I feel like I'm really, on the foundation part of this, I feel like I found something so special. And that's just because of, how hard you work and how hard you market yourself, man. And that's just something you can't learn that, it's, I'm trying not to brown nose here, but it really is the individuals that kind of sell the product, if that makes sense.
Yeah. And I want to touch on that for a second. Before that, going back to the social life thing, I think, look, it's an interesting thing about me. Like we obviously cover Palantir. You're in the Palantir community. I've hosted a weekly Palantir podcast every Friday night for the past 18 weeks with Chris Patel and Sachin. And I've got people messaging me like, bro, it's Friday night. Don't you want to like go out and do something? And I'm like, look, that would be kind of cool, but building this thriving community of people that kind of see me as like a leader, and not to sound like cultish, but like someone who's objectively expressing my thoughts and my opinions and getting them out into the world and answering really important questions. Like, Google's working with Palantir. Could Google ever buy Palantir? Well, let's talk about it for 20 minutes. That stuff to me is interesting, because the long tail of that is you get people's trust as a credible, authoritative source that actually gives a crap about what they're doing. And when you get that trust, you get people like you that are like, this guy's giving up his Friday nights instead of going to the club to host a podcast for 200 people. Maybe he's actually obsessed with trying to get a goal done. Building a startup is really difficult. Like it's one of the most difficult things in the world. And if you're not obsessed, if you're not literally obsessed with just having this thing kind of come to fruition, there's not even a shot in hell it's going to have a chance. So I think that obsession is important. I think sacrifice is an incredibly important thing, no matter how hard that sacrifice is.
I completely agree. And I think that kind of ties into, I think a lot of people that are going out on Friday. So I used to be like that. It took me till I was about 22-ish to kind of discover where I wanted to go in life. And what I mean by that is, I knew I wanted to go back to college. I knew I didn't want to stay in the military, but I didn't know exactly what for. So I had to kind of find what my drive was. And once I found my drive, the reward that I got for working towards myself or working towards, what's kind of motivating me, that's 100,000 times better than, getting shit faced at the bar with my buddies on Friday night. Now that is fun to do. And I still, do that every now and then, but it just, the satisfaction that you get from completing something that you're really, really passionate about is something that, you can't really mimic. So I think a lot of the people that, don't really understand it, it's not that they're not capable. It's they just haven't found what they're really passionate about.
Yeah. And that's one of the things I'm very grateful. I think a lot about mortality and death. And I think about the average lifespan for an average male is 74. I'm already 24. Like, you're already 1/4 of the way done with
oh yeah, you're getting close, man.
Right. So it's like, to me, I'm like, well, I was blessed enough to find my passion around this particular type of company and niche when I was 22. And it's been 2 years now where we're at the point where we can finally raise some money. So it takes 2 years just to even get to that point. And so I don't want to let that opportunity slip away, because it's important. Going to what you said as well, I used to get shit-faced at the bar as well when I was in college. So to me, it's like, I enjoyed that portion of my life. It's definitely fun. I had a great time doing it. But now, big boy pants on, I'm trying to go chase the world and build $1 billion company. So you got to give up the shit facing sometimes.
Yeah, no, and I agree. I mean, what's more fun, spending, $100, $200 at the bar one night with your buddies, you're, making a couple thousand because, your investment paid off, or making a couple million, or maybe, hopefully a couple billion in the future, if everything works out the way you want it to.
It's the journey. It's the process. Like I'm so incredibly blessed that you, and we can say this publicly because it'll be public, you're investing $10,000. Your $10,000 is subsidizing my ability to not have to work a job and actually go chase my dreams. It's selfishly, if I win, you win, obviously. But the fact that you're willing to take that risk, it just means the world. And I've told investors who are investing $2,000 to investors who've told invest. The first check we got was in March. It was from an investor who hit me up on Discord, and he said, "Hey, let me get the pitch deck." I had no idea who this guy was, right? It was this random username. And I sent him the pitch deck, and he said, "Looks interesting. I want to put in 25." And I was like, "What?" I tried to keep my, I was like, "Okay, sir."
What's going up? Adrenaline rush. You can't really think straight.
I was like, "Let me get this done right now before he changes his mind." And he was never going to change his mind, because apparently the guy had been watching me for the past 2 months on YouTube. He's a CTO of a mortgage company. So he's like senior vice president. Like he's up there. 25K to him is quite literally pennies. Yeah. So within 30 minutes, he wires me 25K, and I'm looking at the bank account like, I just got 25K for a guy who's, and I said, "Why'd you invest?" Because he looked at the pitch deck for 10, 15 minutes. He's like, "Look, it's a great idea. And nine times out of 10, this shit fails. But I think you're the 1 out of 10. And he says, the reason I think you're the 1 out of 10 is because I've seen what you've done on YouTube. I've seen how you grew from 0 people knowing you in the world to 10,000 within a couple months. And I'm just betting on your personality and your drive." And I don't want to let those people down. Now, that doesn't mean I'm going to be successful, but what that does mean is I'm going to give every fucking thing I got and leave it on the court just to give it a chance, you know?
Yeah. And I mean, at this point, you know, you definitely have to now because, you know, if it fails, you got a long gap in that education to whenever you have to apply for a job, man. No stress or anything. No stress.
No stress. This is what Tom was saying. He's like, look, if you fail by 30, you'll be broke. You'll have no wife. You'll be seen as a loser by everybody. So it's pressure, but you know, in the cliche sense, pressure creates diamonds, and it's the most thrilling journey of my life. And I'd rather have that pressure than not have pressure. So
I agree with that, man. And you know, luck does have a little part of it, but I think that luck is also influenced by the amount of effort that you put into it. So we can argue whether or not that's actually what luck means. But you know, someone that's working as hard as yourself, I think that luck has less and less to do with it at this point. I think it's you know, taking the appropriate actions and then acting on them, which you've been doing flawlessly, you know, I don't want to say that the entire time. You've been executing since I've known you over the past couple of months, which has been insane to watch. And, you know, for someone that's investing money in there, it's very, very nice for me to see.
Yeah, that makes sense. Last question for you. You talked about the betting on the individual and kind of seeing how they market themselves. Part of the marketing and distribution strategy for Audea, I think, is going to be incredibly unique because I don't think I beat Spotify or Amazon, or not even have a chance to compete with them through like Facebook ads and through like Google ads search. Like all that stuff is cool, but I don't think I can buy customers. I think this is one of those products that I've been telling investors, look, if you're going to bet on it, you're going to bet on a guy who's going to make himself the biggest personal brand of this space and create a very innovative and quantitatively approached content marketing strategy to then drive traffic to the product and get people to be emotionally attached with the success of this journey. Kind of take them on the journey of building a startup through social media content and get them to care about the product writ large. How do you feel about a marketing and distribution strategy that centers around the individual to then drive traffic to the actual product?
So this is actually a really good question because I actually just read a marketing book by, I don't remember what his name is, but I can look it up and get back to you later. This kind of covers the gap from what's taught in academia to what is real life application, right? So one of the biggest kind of pivot points that marketers had to realize is if you go back to the 80s, 90s, early 2000s, if we look at those ads that they put on TV, those are some of the cringiest things. And, you know, it's just, you just watch it and you get uncomfortable, but it worked because it got people talking about it. So one of the things that I don't think very many people know, it's pretty wasteful to spend money on advertising through Facebook, through YouTube, through pretty much any ad service, because the majority of your customers are from another person. So what that means is, hey, I'm giving you a personal recommendation. So, you know, me, Erwin says, hey, to Amit, I like this. And that's where a majority of users actually come from. Yes. So I think that you're attacking this the perfect way. And one of the things that this book talks about is the difference in marketing strategies to different generations. So our parents, for example, word of mouth does not mean as much to them in comparison to seeing a good ad or a well-executed marketing strategy. Whereas our generation, we could watch a freaking, you know, $100 billion budget ad on TV and we wouldn't think anything of it. That holds less value in the way we make our decisions than personal recommendations through, like, you know, a friend or romantic interest. So I think this is pretty much the perfect way to go at it because, I mean, the majority of users are going to be our demographic ideally.
Yeah, I don't see people downloading my app, and not just my app, any consumer product that's vying for the consumer's attention in this attention economy because a Facebook ad popped up, or because, you know, it's not going to be the traditional way to get users. It's got to be some type of emotional connection. They've got to fall in love with the story. They've got to see consistent levels of content, because the first 500 videos they see, they're still not going to be convinced. Then finally, it's got to be a personality driven product. I think it's the reason why Coinbase, when their Super Bowl ad, Coinbase, $1 billion company, it was just a QR code. It's like, why did that work? It was different. It attracted curiosity and it got people to download the app. It had nothing to do with some huge production. And then you see other apps obviously partner with influencers and influencer marketing. But why do they partner with influencers? Because if Kim Kardashian says that, you're more likely to invest. So I think for me, building up my personal brand and building up the credibility around the startup entrepreneur who's trying to change the entire world is way more likely for you to at least check out what this guy is doing and give him a sliver of your attention versus trying to target you because you live in New York City on Facebook for some reason.
Yep, I 100% agree. So I think you're doing the right thing there.
All right, man. Thank you. I really appreciate your time, Erwin. It means the world to me that you're investing. Obviously, you know this as much as anyone else. We're in a downturn, and getting money from people is hard. You've got to build a connection with them. You've got to get them to care. And ultimately they, meaning you, have to be willing to take the risk. And $10,000 is not a small amount of money in this economy. So I really appreciate you taking the risk, taking the chance. I'm excited for you to see the journey over the next 2 years and see how we do this. And hopefully we can take this to the moon.
Yeah. Thanks for having me on, man. I'm excited too.
All right. Sounds good, Aaron. See you later.
Yep.